And welcome to the special YouTube edition of MF Corner. Today we're going to talk about something that has really just picked up a lot of enthusiasm in the past few weeks and months. I'm talking about gold here. Prices have been on a rise over the several months, and this is something we've been talking about as how do you really get in with your mutual fund investments. If at this point you want to include gold, how do you go about it? So to help us with that, today we're joined by Vishal Dhawan. He's founder and CEO at Plan Ahead Wealth Advisors. Vishal, thanks a lot for joining us and taking out the time as always. That is my first question, that at a time like this, there's so much talk about gold, right? That everyone who's investing should have some kind of exposure. Is that what you believe, number one, that everyone should have some amount of gold in their portfolio? And if yes, what should your portfolio allocation strategy really look like?
Thanks for having me over, Pavitra. It's always a pleasure. So I think, we need to be very aware that gold as an asset or as an asset class tends to behave very differently from other asset classes. And that's really its big strength, because typically you'll find that gold and equities, for example, have a negative correlation with each other, which means when one goes up, the other goes down and vice versa. So I think, it's very, very important for investors to understand how gold really works. So one, at times of crisis, you will find gold comes into play. The second is the gold investment that you make is normally a very good hedge against a falling rupee. And you will find that, for example, over the last 1 year, the rupee has depreciated quite sharply against the US dollar. And in these periods of time, you do find that gold does very well also. So both these parameters are very, very important when you make a gold decision, that you understand what is the driver of gold, uncertainty on one side and currency movements on the other. Now, assuming that you've got that clarity that, gold will behave in this particular manner, there are another few factors that you need to keep in mind. One is gold can be very volatile. So there's a belief amongst a lot of investors that gold is a very low volatility asset class. In fact, people, a lot of times investors tend to believe that it behaves like a fixed deposit or a very safe instrument. Whereas actually, if you look at volatility in gold, it's quite high. So as an investor, you need to be a long-term investor in gold, just like you're a long-term investor in other volatile assets like equity or real estate. If you've already got gold in your portfolio, then I think you need to be very careful about how you wish to allocate gold, because what can happen is, because gold has been one of the best performing asset classes in the last 12 months or so, there is a tendency for there to be a recency bias, which means that you end up buying what has done well in the more recent past. And then, assume that that's the same method that will continue going forward as well. What we'd say is that look at your gold allocation first. Ideally have between 5 and 10% of your overall assets in gold. When you're thinking about gold, think about jewelry, think about gold coins that you might have, think about other assets as well. Anything that you will convert to cash if required. So if you're going to buy or hold jewelry and never going to sell it at all, then I think you should keep it outside of your gold portfolio, because it's just a asset that you hold without being ever wanting to convert it to cash. If your allocation is below 5 to 10% after you've accounted for all of this, then look at adding gold in. But do it gradually right now, because gold prices have gone up quite sharply. There is still global uncertainty, but we need to remember that the sharp underperformance on the rupee versus the dollar may not repeat every year. In fact, if you look at it historically as well, that's a fairly long sort of period where, rupee remains fairly stable against the dollar. And then there are years where it falls very, very sharply.
Okay, got that. So you said around 5 to 10% is a good amount of allocation for most people. Of course, it differs from person to person. But now if you're looking to add gold, there are so many ways to do that as well, right? I mean, you could look at physical gold, you could look at ETF, sovereign gold bonds. Which way would you go, or how do you recommend that someone pick what's correct for themselves?
Yeah, so I think this is probably the most difficult question for a lot of investors. That, they decide to buy gold and then they get confused on, how do I really allocate? And this confusion has actually increased a little bit because there has been a tax law change that also came into effect from April 1, 2023, where if you hold gold either through a mutual fund or through an ETF, then the tax treatment is such that it will be counted as a short-term capital gain whenever you decide to sell it, and therefore get taxed as per your marginal tax slab. So, for example, if you're in a higher tax slab, gold is now less tax efficient than it was before April 1. The way to approach this is that make 2 or 3 decisions when you're thinking about how to buy gold. One is, are you really holding for the long term? And are you therefore less likely to convert this into cash for any reason? If that's the case, then the sovereign gold bond is a very good option, because what happens is if you hold it to maturity, the gains that you make on it is tax-free. And that can be very, very valuable, especially for those investors who are in a higher tax bracket. For those who are not sure about how long they're going to hold for, they might find that instruments like an ETF or a gold mutual fund, which in turn invests in an ETF, is still a superior option because of the fact that the liquidity is very high. We need to remember that the sovereign gold bond is not a very liquid asset, because if you want to get out before its completion of 8 years, you need to sell it in the secondary market where there may or may not be volumes available for you to be able to make that sale. So the ETF becomes a good option in that situation, or a gold mutual fund. What you also need to keep in mind is that if you're buying gradually, like an SIP or an STP, which normally would be recommended in these kind of periods where gold prices have also gone up quite substantially in the recent past, you might find that an ETF or a gold fund is still an option, and you may want to look at combining it with sovereign gold bond purchases as and when the issues come up. The reason why this is important is the sovereign gold bond is not available on tap whenever you want to buy it. There are issues that keep coming up, probably about once a quarter on an average. And during those periods, you actually subscribe to the sovereign gold bond. And therefore, if you're trying to buy gradually, the ETF or the gold fund is still an option. One of the things that you also need to keep in mind here is that in the gold mutual fund space, there are also some gold funds which buy gold mining companies. And these are international funds. These tend to be much, much more volatile because the performance of that fund will depend on also the performance of the underlying companies in that particular fund. And therefore, you are effectively taking equity exposure in that situation. And therefore, be a little careful about the kind of gold mutual fund you want to buy into, because it depends on what you're really seeking from the gold investment. As far as physical gold is concerned, we would tend to tell most investors to avoid it for a few reasons. One is that, whenever you're buying physical gold, there is always a question about the purity of that gold. And there's also the challenges of physically storing an asset like gold, which come up. So our sort of recommendation is look at the sovereign gold bond as your first choice.
Yeah.
And if you want to add gradually, then look at the ETFs or the gold funds as alternatives.
Okay, I'm sure that'll really help our viewers in terms of, what they can buy and what works better for them. But Vishal, now that you've told us what you can buy to, get some kind of gold exposure, take us through, since these are passively managed funds, right? They just reflect the returns seen on the underlying asset. Does it matter too much which AMC you pick, or, for this, it's relatively easier to pick an AMC?
In general, there are 2 things only that you need to look at when you're buying a gold ETF in our view. One is there enough volume on the gold ETF? As a result of which, if you want to sell it off, is there going to be someone else to buy it? So I think for most retail investors, you will typically find that gold ETF volumes are large enough. And there's also a concept of authorized participants when you want to do large transactions that can create, or market makers that can actually create volume for you when you want to trade large volume. So in general, because gold is a fairly liquid asset and the volumes are quite decent, you will find that the AMCs which you want to go with may not be such a critical aspect on the volume side. The other thing you need to look at is expense ratio. So, because the underlying asset is largely going to be the same, which is gold, you want to be able to buy something which has a lower cost, because the lower cost would translate into a potentially higher return for you as an investor. So these two parameters, in our view, are very important whenever you're making gold ETF decisions. And of course, if you don't want any of the headache of liquidity or any of that, then buy a gold mutual fund, which will in turn invest in the gold ETF, and therefore, you can get liquidity whenever you want.
All right, Vishal, I think that really explains it and helps, someone who's trying to get in on this space but had some questions. So thanks a lot, as always, for taking out the time and speaking to us today. That is the view coming in on gold, what the allocation should really look like, the kind of products that you can look at in order to try and get this allocation, and of course, how do you pick an AMC and a fund. But with that, we're going to wind down on this special MF Corner. Stay tuned. We'll be back with lots more on the mutual fund space.